from Sikich, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we look at what happened in the market during the last week, learn something from it, and plan for a better trade for the next day. And this is the analysis for the week that's starting tomorrow, Monday, March 20th, 2023. So welcome to technical analysis. Here we have the charts. So the weekly charts are showing it's a crackdown, right? Bearishness extended further down with a wide range bearish candle. Look at the candle size, the range of the candle of the Bank Nifty. Huge crash down and then some recovery shown by the wick. And we are at a support zone, which acted as a breakout zone earlier, or resistance zone earlier, right? So there is a chance that it can bounce it from here if it takes a support here, or it could go further down and then take a support from here. All the possibilities there, but right now at a support zone with a wide range bearishness that happened last week. And look at this daily charts. It has been descending since long, making lower highs, lower lows, lower highs, lower lows, steady. And Bank Nifty joined that in between and then steady, lower low, lower high. And look at this last two candles. It's pin bars, so you can see the small bodies, reversal wick candles, and definitely closing positive 2 days. Which gives us probability that it can move further towards the 7,800 levels and 42,000 levels possibly. It's a possibility that we cannot rule out, but the trend is down, is for sure. At the same time, if the low, it's the higher high, higher low that's being formed in the weekly charts and short-term charts, daily charts, it's a lower low. So that higher high would be breached at this 750 kind of levels, and at this point of 37,500 that zone. So that's where that pattern gets breached on the higher time frames. If that breaches, then you have definitely. Until then, bulls can still hope for some upward to happen. But definitely these last two candles are encouraging. Look at the Bollinger Bands, definitely continuous breakdown, spillover, skews breakdown that is seen and indicates further bearishness. Expansion of volatility on the downside is seen in the daily charts of the Bollinger Bands on both indices, right? Definite negativity. Another view, another weekly channel. So we are talking about this famous zone, which from where the breakout had happened on both indices. That trend line, and indices have decisively closed with a weekly candle below that major zone from where it had made the previous breakout, and any close above that would be essential for us to talk about anything that's bullish, right? So that's another view. Same as the Bank Nifty, also the rounding pattern. Breakout happened, took the support, lost the support, tried to climb back, lost support, tried to climb back. Multiple times attempting Bank Nifty to climb back above that blue trend line. Let's make a note of the support resistance levels that you can see here. Right, immediate resistance would be 17,300 zones for the Nifty. Then we have 17,400, 450, 550, 575, 650, and 800. So that's how the resistances goes. All the previous supports will now act as resistance on the upside. Remember, we are below this Fibonacci 61, which is quite far away. And we have downside supports, right? Also at top, right? 6950 will be a support, 70,000 rounding number will be a support first, and then 6950, 16850, which is a previous swing low, and then 16752 and 16650, it's a gap support and previous swing low as well. Right, Bank Nifty daily chart support resistance levels. The immediate one will be 61 retracement level, 40,000 will be the main one, then 4,500, 4,800, 4,100, 40,000, 41,000 rounding number, and that's for the then 41,600 and 41,800 and 14,000. That's where the change happens to the price action. If it all happens downside, you have 38,600 previous swing low and 38,500 nearby zones, 37,950. And then 37,250, 36,800, like that goes in between. Rounding numbers of 37,000 and 37,500 comes in between. So I can act as support and downside. Right. Let's just summarize what happened last week. So it's 1.82, that's 370 points lost. Not first times. Remember that we lost it after a big loss that happened the previous week, right? So it's a wide range bearish weekly candles that you see on both indices, and Bank Nifty is long. 878 points. That's after the recovery. That's 2.7 points of weekly downward that's happened again. Wide rich bearish, and they're both resisting below the 20 weekly moving average, and Nifty is resisting below the 50 moving average as well, weekly moving average. And yeah, we are still below the trend line resistance we have seen. So correction is 12.5 the Bank Nifty and 11%. So 11 to 12.5% is it's good fair correction. Anything goes down from will be bearish. Extreme bearish if it goes below the 20% correction. So right now it's fair enough of correction has happened. And there is a set of support zone that we have seen. There is probably of seeing my daily time frames. We have gained 114 points up on the Nifty with a small body that's in this weak reversal pattern. The reversal pattern appears with a small body and very long wick on the bottom of a trend. So that's right. So that's then both indices at the same, and it has climbed back to the 200 EMA Bank Nifty, but Nifty has not done that as far away. So Bank Nifty has done that. It's good. That can be a precursor to a number, but it still remains below the 20, 50, and 100 exponential daily moving average in Fibonacci 16 retracement line from the last one low. So the liveliness is still there, but some hope for the bulls. Lower high pattern we already discussed. 7840, 1672 is near to 42,000. That zone, that's going to be the place where the price action would get negated on our low pattern on the short term. 16750, 16650, and 13. 386, 17386 is a mistake, not 13. 17386. Those are the levels that you have to look out for the downside. Bollinger Bands, we've seen that it's already showing a negative move, further continuation, expansion. The bearish bias for the price below the moving average also 20 big one moving average. It's a median of the Bollinger Bands. We've seen that. They will talk about this. Right. So let's go ahead and see the momentum and the trend indicators. What does it say? So weekly momentum is what you see there on the top. So the Nifty left side and the Nifty left side. So weekly momentum is showing sideways, and Nifty is closer to a support zone, and Nifty is heading towards that falling momentum sideways zone. And daily short-term momentum is bearishness, continued to be bearish but rising, right? And how about the ADX indicator? What you see down here is the ADX indicator, which indicates the trend, the short-term trend and the long-term trend, right? Top we have the long-term, bottom we have the short-term for the both dices, right? So they are bearish, both in the short term and the week, and the medium term, the weekly and the daily and the weekly. The trend remains bearish, and that bearishness is increasing. The strength of the bearishness is increasing both. Right? So momentum is improving, but trend has not changed. Trend is set to change. Momentum has improved, but not much. Right? In the short term, it may show the improvement, but not much. Right? So sideways momentum continues, and bearish momentum in the short term continues, and bearishness on both time frames continues. On the trend perspective on both indices, let's move ahead. Volatility is measured with Bollinger Bands also, and now we are analyzing volatility with the India VIX, which is 10% of previous week. Also does 10%. So that makes it 22% nearby of up move that has happened, and it's on the edge of getting in the breakout of the lower regime of the India VIX. So 14.76 is not that low. Remember, we were in the 10, 11 range sometime back, and we are talking about 15, 16, 17 where it spiked last week, and then finally settled below the 14.6. That's quite a big spike that has happened. You can see that 21%, 22% of spike has happened last 2 weeks, and that's not good. So VIX is spiking like everything. There is uncertainty due to the bad negative news that came out of the bank collapse across the globe, and the global Qs are not that great last week. So that's what the spike has happened. And now to see whether the mean reverting nature could spike it to take it further up to the 20, because we are still at the bottom if you consider the previous high. So we are to be cautious of if the VIX is spiking around 20 or not. To be cautious about that. Now here comes a good news. The open interest analysis of the data on the last futures build-up is showing that it's a short covering rally. There's a short covering build-up is what is seen on the Nifty and the Bank Nifty, both of them. The futures OI, right? And the options OI, there is contra trend. That most on the third weekly span is what you're talking about. It's not bullish enough, neither it is bearish. So 0.68 is what the PCR put call ratio, the summary of the puts and calls is written in the analysis, right? The 0.80, which is the Bank Nifty, which is closer to bullishness. So Bank Nifty is having more bullishness as per the options OI data. Look at the levels that options, right? So it's at the equilibrium, you can say. The Bank Nifty is, the highest put rating is dominating, so slightly bullish. Yeah, so that's how the level 17,000 and 17,800, very wide range. That's where the highest put and call rating is in. Support resistance can see there 17,100 and 17,500 is the second highest put and call rating on the Nifty. 0.68 and for covering we already seen. Bank Nifty 39,000 and 41,500 outs. That's again 2,500 points of gap. Very wide range. No speculation. The option writers have seen that the big volatile modes can happen on both the sides. 38,000 and 40,000 is the second highest put and call rating. The support and resistance are seen on the Bank Nifty, right? So that's it. So in a nutshell, futures high open interest is indicating short covering, which is bullish in nature. People are covering the shorts that are gone and then turning the longs. So that means it was it's expecting the market to move. But options high for the next week looks barely showing that the option writers are seeing very wide volatile movements that could happen between 17,000 and 17,800 and 39 and 41,500 is what that is showing. But put call ratio is like not bearish, but Nifty is not closer to the bullishness, while Bank Nifty is closer to bullishness. 0.80 is here, right? That's a nutshell. Let's analyze the industry sectors, various industry sectors with the charts also, and see what we are. So we have a sideways momentum that is seen only in the metal sector and the realty sector. Rest is all short-term bearish. IT sector bearish, metal sector bearish. We're talking about momentum short-term charts, momentum indicators, right? IT is bearish, auto sector is bearish, short-term, pharma is bearish, FMCG is bearish, but reality in the metal remains with sideways at least short-term. Now, who is the most bearish? It's the pharma sector because weekly charts are also bearish. Simple. So what happened last week? It was all down, right? There was only some up move that happened in the reality, which is 0.30 flat. That's you cannot call that up. So down was FMCG down 1%, FMCG down 1%, pharma flat. So pharma and the reality was flat. FMCG down, pharma flat, down. Auto sector 3.9% down. So auto was hit highest last week. Nearly 4% of down more. While it's bearish can metal is down, it is down. Everything was down except a small spike in the reality. Overall, pharma is heavily bearish. You can take short portions of that if you may. And auto had fallen down from the strong portion that it had earlier. And overall, you have a sideways only in just two sectors, and bearishness seems to be dominating across the sectors, which is worrisome. These are the charts for all the major sectors that we're talking about. On the left top, you have IT, which was trying to move up but got hit because of all the bad news in the US. And metal is spiking up after a big fall down that happened earlier. Just trying to say the sideways. Auto has got huge hit last week, but still it is safe for the neckline of the breakout zone. Pharma is most bearish and it is falling down momentum or towards the bottom of the descending wedge, and FMCG is staying strong. But last week it got hit with a wide bearish candle, but we are still consolidating within a short time frame. Whatever slipped in the sideways, whatever one of the only few stocks which is remaining in the bullish zone. Certainly, reality is zigzagging within that consolidation range, and trying to maintain its position in the sideways momentum. Industry heavyweights. We analyze the top 7 industry heavyweights that constitute maximum to the industry. How did that perform last week? Right? HDFC, that's where the action has happened. And this actually has been consolidating and showing a flag and fall pattern since very long. More than 10 or 15 weeks it has been doing that, consolidating the same price. Just giving the hope that the breakout eventually happen, but last week it was treacherous and it has fallen down and touched almost neckline and turned us crossed over to the negative, momentum has slipped in the sideways, deep falling down. HDFC also was consolidating since multiple weeks and months, and finally it also has followed the path of the the HDFC bank system. Reliance Industries is also in the bottom. It's a 52-week low. It has gone last week, but basically it is consolidating since last 2 years in the same zone. Any breeze from this neckline from where it had broken out and then started consolidating 2 years back, if that happens, then we have worry. But momentum has slipped in the bearish zones in the medium term, which is the worry. Will this neckline support or not? So worry there as well. Infi, fallen down now, doing zigzag between that range, and that's what is happening. TCS got hit because of some bad news, because of CEO change, unexpected, and all the gains are given up and it has fallen back to the trend line from where it attempted a breakout. Momentum is also sideways. So IT index is maintaining the sideways momentum at least. ICICI Bank indecisive, consolidating sideways. Well, Kotak Bank, as usual, has been consolidating sideways with the divergence and likely to keep the sideways in the ICICI Bank, Kotak Bank, and the IT stocks, Infi and TCS. But trouble is here for Reliance and the HDFC Bank. These are the key contributors to index, and that's what the selling has primarily happened, is what the charts are indicating. So, keep a close watch on these two, HDFC Bank and Reliance, so how they are going to perform the next week. And ICICI Bank also joins the HDFC Bank format and breaks down from this trend line, then we have the trouble. So they are holding the TCS and HDFC Bank and are basically holding the markets out of the other constants. When they are cracking down, they should once we have to keep close watch. HDFC Bank, you have to keep a close watch, and HDFC and Reliance also, you have to keep close watch with what's happening next week on that. But as of now, a good picture on the Reliance and the HDFC. Now, moving ahead, institutions already participate last week. This week was okay. Net buyers institutions were, but look at this. If as a aggressively sold nearly 8,000 crores in the cash market last week, and DIs were just managing to compensate for them. That's why market did not fall. So 9,230 crores of DI may happen, but net, we are green, but institutional support from the FI side is lacking, and they turn into aggressive sellers. It's worrisome, definitely, right? Because the market really more for money is required. And the derivative side also, it's moved down. FIDA derivatives have moved down, basically, right? How did the global markets and the global commodities perform, the currencies performed, right? That's what we are going to analyze. This one single or three charts next. We'll be analyzing that. First, to begin with, it is all drama in the commodities. We'll come to that later, but before that, the currency. Currency is contradicting, which is nothing surprising because they are not directly correlated. The dollar index has fallen 7.5%, but the USD INR currency pair has shot up 0.7%, right? So that 2.50, 103.80. So that's why the rupee is weakening, and with respect to the dollar index charts that we're seeing, it's a couple of breakout, and it is facing us to the top, and then it's towards the bottom of the handle, right? Which is okay. But in the sense, it remains to be bullish. Dollar index also there is some pullback. But look at this. There's a chance of another new all-time high low rupee level can happen very soon, because it's heading towards 83.5 kind of levels once again, getting the bullish one. So this is very simply getting into weaker and weaker daily, right? But the momentum as of now is sideways for both the dollar index and the US INR. Now, the drama has all happened with crude oil. Crude oil is 66.4. Can you imagine this? That's 13.5% down last week. And it is nearly 50% of correction that has happened in just last 2 years. It's definitely a relief. Not the oil marketing companies, probably. Yeah, it's in bearish zones or momentum, the weekly medium-term charts for the crude. So crude falling down is a relief, considering that dollar is shooting up. So the dollar shooting up has negated all the benefits of the crude. But that's the drama that happened. You can see that here the crude oil has fallen. Look at this candle. It's 13.5% of fall. One of the biggest candles. So it's a 50% correction in just 1 year. All the way from the swing high to the 13, from the 13-year high, just fallen down to 66 kind of levels. Can you believe that? When we're still in the sideways, not gone to the bearish zones. Oh yeah, it was already gone to the bearish zones. Right? Just slipped into the bearish zones. You can see that. Now, another drama that has happened here. Here you have the gold charts that you're seeing there, and it has broken out and they're heading towards 17.8. So 1993 zones, and above that 2074 all-time high levels. It's breaking out of a cup and handle pattern with a rising momentum breakout, and trend indicators also with extreme strength. Right. So what is happening? 6.5% up in just 1 week, and 23% up in a couple of in a few weeks from the previous swing low. That's maybe 10 weeks, but huge breakout move is happening in the case of gold. So this is good as for those who are using gold as a hedge instrument or a long-term instrument, is fine. But whenever gold spikes, there is a likelihood that the markets can can break, maybe crashing, right? So there will be cautious on that. But yeah, gold spiking up, and the hedging instrument is spiking up, and you had long-term investments in gold might make a hell lot of money. But question is, will this succeed? It has failed 3 or 4 times before. Will it succeed to break out of this zone and make a new all-time high this time? Will it happen or not? If it happens for a reason. People will shift their money to a safe instruments only if the equity markets have trouble. So that is a trouble or a worry that we have right now. Now, US market. That's the next thing that we're going to analyze, right? Dow Jones, the S&P 500 and the Nasdaq starts reducing. This is S&P 500 down, and top Nasdaq, and left you have the Dow Jones. S&P is the broader index, and Nasdaq is the technology index, and Dow Jones is just like the Nifty 50 that we have. And we're seeing that we had a big fall last week, big crash down, and this week it is trying to recover a bit. And Nasdaq charts that you see that it is attempting to climb back in a very solid way with a wide range bullish candle that you can see, but again it is hitting a resistance zone. All three S&P 500 also tried to climb back, but not too much. So it's a mixed bag. The climb back succeeded in the Nasdaq well, but not on the others. Others made flattish kind of moves, but green closes at least on the S&P 500, but not on the Dow. But yeah, an attempt to come back has happened. Probably maybe remember that there's a descending wedge, and Dow Jones had stayed there for 10 or 12 weeks here and then broken down. Now it is attempting to climb back once again. Will it succeed or not? Even the Nasdaq, which has done a good decent bounce back, has hit the resistance. Will it succeed or not? We have a question mark there. This is something that we have to keep closely watch. The bearish pressure on the US markets. Right? Gold is breaking out. Is something happening over the equity market. Crude has gone to the lowest level, which is good. Currency, dollar is depreciated, but contra, the rupee is not strengthening at all. So we have some worrisome figures, except for the crude oil. That you're getting from the global markets, commodities, and the countries. So what do you have for the stock picks for the next actionable items for the next 2 weeks? So I have a short trade opportunity that could work out. The emphasis, which is ID mid-cap sector, there is a probability that we can have some down move that can happen after the consolidation breakdown. Momentum seems to have slipped to the bearish zones on the medium term, and trend seems to have crossed out the bearish zones on the medium term. So price action, momentum, and trend seems to be so there's a trend line distance. So have tight stop loss about this week's candle high, and then try to play for a reasonable risk reward of more than 1.5. Risk reward can be possible. Larsen and Turbo is a long trade. It's a word of caution. There is a negative divergence, which is normal, and the market is consolidating before a breakout. But you have to be cautious on that. But the entry would happen only if the price is moving above this rectangular consolidation. So only then you have a trade option. Otherwise, don't take a long trade. Stop loss does it very tight at the neckline of the cup and the rounding pattern, cap pattern. Neckline is where the the stop loss can be put. Reasonable 1.15, 1.5 risk reward, 1:1.15 risk reward can come in here. Trend indicator and the mounting indicators are the bull as well. But wait for the price action to break out of this consolidation, rectangular consolidation zone. If you don't get the signal, don't enter. It's not mandatory for us to. You enter only if you get a signal, of a breakout confirmed. Otherwise, you don't. At least we're on a long time frame. So the price moves above the 262, that kind of levels, make the entry. And if it's stopped out, fine. But have it stops tight. Small loss, big gains. Or consistent small gains. Because consistent small gains more than this smaller stop losses, at least. That is two on the opposite side. So long call on the emphasis, and the toss and double. Short call on the emphasis, sorry, and last and double long calls. Let's see stock actionables, and one more actionable we have. Very beautiful double diagonal counter spread that we have been taking. Last week you took the Batman strategy. We had a 400 plus point of range. Still we breached that. Unless you had adjusted, you would have ended up in lost. or if you had exited a small profit of 1 or 2%, still you will have more profit. This week there is volatility, spike up, the possibility is there. So we are having a double diagonal contrast where we are selling near months put and call, and then buying hedges on the far month put and calls, right? And the probability seems to be nearly 75 plus, and look at the range, so a very decent range of 16750 is our support zone. If we are breaching that, we are downturn definitely, right? 17500 nearby 459 zone is also a zone of resistance. Actually, it is 7600. So yeah, so this strategy you may gain with already spike will happen because you have 4 month buys, that is hedging, so you cannot decay that much and you'll get something that side also. But as long as it remains this range, you'll make money consistently. But make sure that you get out at 1 or 2% as per your and portion size as per your capacity capital. You'll have a portion size. So what is shown here is one lot. You can take 100 lots or 50 lots or 20 lots depending on how much capital that you have. But here the advantage is that you know what exactly you lose if there is an overnight war that happens or the overnight risk that is there. Next day morning you're still in the game because you exactly know what you can afford to lose and you're taking that risk on that. It's a risk defined non-directional calendar spread, double diagonal calendar spread that you are seeing. So that's an actionable for the next week. It's a weekly. See, these are all weekly strikes and weekly options that we're talking about. So options trading strategy. Let's move on and wrap up now that we have discussed a lot. What happened last week is nothing but an extension of the correction, deep correction. New swing lows are made on both indices. Momentum, trend, volatility, all the indicators are bearish and continue to be bearish even now. Momentum, trend, volume, demand speaks, all of them are in favor of the business. US indices are still under the pressure, although just trying to come back. Negative news flows are still around, right? But we have 2 days of weak reversals. We have a probability of a CIP pound since we are at a support zone. We have corrected substantially more than 10%. There is a chance that it can bounce up from here. Before there is some short covering in the open future, so that is seen on both the indices. So there's a probability there's a relief rally could come in, and for next week at least a cautious bullish market view is what I have. Why cautious? Because India weeks is spiking up like 20% 2 weeks, 10% this week alone, and it's on the edge of a low and high vol regime. And the gold is spiking up like towards the all-time highs. US markets is extreme selling pressure. Global gives are not great. Negative flows, bank crash, and interest rate hikes, and Fed decisions are coming next week. All the uncertainties are still floating around. Crude is giving some hope, but rupee is weakening and negating all the gains. So that's uncertainty is there. That's why you have to be cautious, right? Have 10 stop losses, define your risks, and play only with the risk that is defined by you. Close watch 6650, 36800 on the low side, and 17800 at 40,000 upside is only where the trend will change. Until then, we're just moving here and there. Right? And if there is a breach of these happens, then we have extremely turned to the other side, either upper side or lower side. Right? So, keep a watch on these levels. Right? So once again, whenever market is crashing, these might give you opportunities for you to invest, not at one shot. Invest in SIP, small amount, Nifty Bs, good quality, top 10 quality stocks for long-term investments, and you can pledge that and play with the collateral. You can play the options game, options game of getting rental incomes, right? And also, you can invest using the options also by using calendar split covered calls and cash secured puts and cash secured puts and covered calls. So these strategies are there in the playlist. Check out those if you're not seeing that. So play safe and stay invested and define your risk and cut short portions as it which is spiking up beyond the 20 levels from here, right? So that's my view. Cautious, mild bullishness could, short relief rally could come in next week is what I look forward. But I may go wrong and market may turn out to be even more bearish because it's a mix of both that the charts are talking to you. Last week was easy, this week is a little confusing with the 2 week reversal candles that we just hope for the bulls or hope for the bull inside me, right? So play safe and stay invested. Happy trading, happy learning. But one more thing, please, if you are not subscribed and then watching this, please subscribe right away and help us to keep us motivated to have at least few more subscribers in spite of all the effort that is put into hand. So please share if you are already subscribed to your friends, colleagues, and everyone, so that we get some subscriptions and If you're interested in Telegram Premier services, Telegram services, check out the description and avail that as well. That's it. Thanks for watching. Happy trading, happy learning, and happy investing. Bye bye.